welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Good morning, good morning, good morning. I just want to have a look at the market here. I'm going to show you what I got in on last night for the NASDAQ. Something that's a 4 hour. I'll show you on the 4 hour here. Let me get rid of all this stuff here. These are all my other levels. I've got a bunch of different levels in there. Anyway, this 4 hour imbalance right here, that's what I want to see trade back into. I got it right here. And then go higher. So I'm looking for this to get up into this premium up top here. Just not so clear. Go over on this one. The 4 hour there. And you'll see it better there. So yesterday, when you see me, when I was calling that level, I think we're still, are we live yet? There we go. Got it. So the level I was calling last night was a return. So once we drove up above this level on the close, I'm looking for a return back into this level. So yesterday on our channel, I was calling for just a return into here. I just wanted to see the mean threshold get hit with that candle, no more. And it just came in there. So I was calling for like 313 to 309. So there's your 313, which is at 75, which is that mean threshold there. And what most I was going to get was the fill of that, or come back and do that first, well, that 4 hour imbalance and this order block here. I didn't want to see it get back through the order block and start working its way through the mean threshold. So I was kind of a little apprehensive in that. At this new day opening gap, you can give it still that room to come back to the 50% of the second equilibrium. I was calling for the second equilibrium from yesterday. After the first one was hit, reaching for the second. We've hit the second, found support off the second, and I want to see it reach up into here. And keeping in mind that if you are on a 4 hour chart and you're using take profit model 1, that your stop loss should be at break even wherever you got in down here. We're looking for 62%. You can move it to 50, then 70%. 70% give you the optimum trade entry reversal potential. That's what that is here. And then there's another 4 hour go no go for higher in this level right here. That's what I've got lined up on the weekend, and that's where I'm kind of aiming for this week. So we get up there in the next day or so, and then watch for a reversal on Thursday. I'm looking for that premium anywhere inside this premium level here. So that is that. And that's why I got on where I got on. That's just coming to take me out. Yeah, I took my stop loss. So for reversal perspective, it just got up, so I've just seen this here now. Change in direction, take out a low, market structure shift. We took out this low, and then we took out this low as well. So it traded back into this breaker, reversed, take on not this low now. So for me, I'm going to go high again or long again until I can get some sort of reversal in here. This was the midnight open range. So I'm looking to see if we get, this is a return to the midnight open. That's what all this stuff is in here. I'll open it up a bit. I'm doing a little experiment off of all this technique there we tried to talk about yesterday. I'm not going to discuss it because I'm still playing with it, and I want to discuss it with Ollie first. So anyway, that's kind of like what I'm looking at now, but I'm still going to do the same principles I do every morning to catch a long or a short. That candle right there on the 5-minute chart gave you your reversal. Body trades below here, trades back up into it, goes forward. So I'm still looking for that 344 now. That'll put us back inside here. So if we find 344 holds, I want to see a reversal going on right here, right around that 344 mark, which would be very interesting if we put our 830. 830 is up here somewhere. Let's put the 830 in here. All right, that's the 830, and I want to put one more in there, which is the 6 o'clock. I do like perhaps the 6:30 or 6 o'clock candle. And that puts us at close to the 44 level. Good morning, Hadid. Rome, good morning. Craig, good morning. Well, it's 341.75 at the, which one's that one? 341.75. I see it on the 5-minute chart there. Just remember that's the start of 341.75 to 337.25. But then that will move us through. What's the high in this candle? 343. 343 puts me around 75% with that. Well, Hadi, we'll see which one is all you got is a volume imbalance on the 15. Let's see it on a 5. $339. That's already over 50%. If it gets above here, then that's an upside objective. I don't think they're going to leave this untouched. Or above this level. Too choppy for me. Just wait and see. And let me check out some other stuff here. Already through this level, so we're going lower on ES. Looking for this downside objective here now in ES. ES is already giving you the little indication it wants to go lower. So that will be the next downside target. And Dow Jones wants to see it go higher. So if this 4-hour inversion holds price now, we've got above it, come back inside it. If that holds, I want to see that start pushing higher as well. It's a very similar thing you see on all 4-hour charts. It's this little return into this level here. This doesn't have a order block, bullish order block candle here. It's just all down candles, but we do have this inversion. I would like to see that hold price and keep pushing higher. We're heading for that gap above us here. Crude oil is hitting my downside objective here on 15-minute. I think that's a daily new day opening gap. New week opening gap. Yeah. Wait for these lows to get taken and then look for a market maker sell model, slow risk sell, accumulation, distribution, accumulation, second stage distribution, a unicorn there, take out that low, or this would be a second stage distribution here, accumulation, distribution, original consolidation, take out node low. Let's see if we get consolidation and then a new market maker buy model from here. So that's what I'm looking for there. See if this goes into I like to see it bounce off of here, then ride through it, come back up to it, through it, and continue going higher and get back into this larger range here. Let's get this out of the way. Looks like you got a buy coming up for you there, Craig. Just wait for that to hit this level here. Natural gas. Something. Copper has hit there. Okay. So I want to see copper come lower now. Take out that low. Not that you guys are trading copper and all that. Look there. Natural gas is going to get above here and then take that high. Not touching pound today. Look for 98, 95. It's 99. This one right here. Get a reaction off of that. Start looking for this little discount box down here inside this range. If that's 50%, once you hit here, look there. Take profit model 1. Well, it should be lifting off. It's taking its time. It should be lifting off of there already. It's already through that main threshold, so chances are we could just roll over. If we get through this level here, look for it to target 64, 63. Yeah, look for a revisit down here in the euro for 146. Sorry, 114. Yeah, 146.3. To 114.39, 40, somewhere around there. Nice. So we need to stay above this level now. We did. We used that level for support. We came up to this level, which were all our objectives that we were looking for on the downside. Now we're looking for those to give us support to go higher. These are the holes in the wall we're using to climb this big wall. So the specific levels way back here that we're still looking for to provide support for us. So we get above them, find support at them, consolidation, CAM model 2, and then you're looking for them to be broken and supported. Broken and supported. So the next level you're looking for is this order block here. You want to see its mean threshold get taken to the upside. Right now we're right inside this guy right here. For DAX, See that? Just hit that there. Let me get rid of all these. I'll leave that one on. See if we can get back up above here. If we can get above that, then look for the discount 2, then the 1. Find some support off of this and start hunting for. I'll get that word out of there because it's not discount anymore. You'd be looking for that level somewhere. Keeping in mind wherever you are in here, if you're using a take profit model 1, then you should be well over 50% by now. Yep, just over 50 here. We've come back and tagged it. Now see if this holds and that reverses and it starts coming back through this level. It takes out that candle's low. Use this candle as support to come lower. And that's just a run back into this range. I still think it wants to go higher, but we'll see how this candle holds price. $64 gold, crude, thanks, me too. Nat gas looking interesting. Good morning, everyone. Alan B, good morning. Hope everyone's doing well. Well, we are. Thank you very much for asking, Alan B. Abs, good morning. Don't forget to give Daryl. Oh, thanks. Thanks, Abs. Appreciate it, man. I do appreciate it. And hopefully today we won't have any issues. I have no idea what went wrong yesterday. The internet was rather glitchy, so, or my computer was glitchy. The internet was doing fine, but for some reason, like, I rebooted everything, we updated it. So anyway, we should be back on track now. We don't mention any political stuff here, so I don't see why they'd be looking at my channel. It's not like we're hauling in thousands and thousands and millions of subscribers and we've got some, you know, terrible agenda. We just want to make people happy, rich. I can give them some money to help other people out, man. That's all we're trying to do. Anyway, let's go on to the next one. Where are we at here? So this is your gold. I wanted to see gold come up to here, down, back up to here, and then back down here, but it's obviously went from here straight down to my objective. And now it's reversed. So you can forget this. I had this in gold last night. So I wasn't looking at this one, this double bounce here. I was just looking for this to get down to this objective, which it finally reached. It did not give us the, I guess it did give us the little kickoff back to here. So anyway, it's not like you can get them in the perfect when you're trying to predict where it's going to go, but we did get the downside objective, which is good. Morning, Derek. Theta waivers. Where are we going next for gold? Look for this objective right here. We've opened and closed on that, so we'll see if we continue to push up into this level here. See if that holds right there. It keeps coming higher. It's 15 minutes. I'm just looking at a 15-minute chart there. Bitcoin. 13 minutes to do this one. So we've run out that low. And we'll see if that works its way back through here. We just tap this, roll over, and come lower. Where's my next downsets? If we get back through that, look for this upper premium level. And then we'll look where it's going to go from there after that. Because there's a couple of levels above that before we hit this yet. So that's Bitcoin. Let's look at banks. Canadian Imperial Bank's coming back into that discount box. So I expect to see some sort of reversal here to come lower. We get back through that level on the close. Then we're back inside this range. We're back into a consolidation with a quick sweep below old lows there. We have not reached the 50% of that range yet. And we're just shy of it. Little piggies in the street. Motor car. Sausage meat. That's what we said when we were kids. Used to pull on little baby's toes. Little piggy in the street. Motor car. Sausage meat. I don't know. Breaker takes out the high. We're up in the premium abs. All we need to do is start popping through here now. See how we've got above this level? I want to see this holds price now, start pushing higher. And then we've got the big run from down here. Cocoa, this looks good right here. I'd be willing to put one in cocoa right now. Right there. Just put that there, and then I want to put the stop loss just below here. I see no more than 50% of that. And then I want to see that come up into there. You got this one here, here. Now let's go a bit bold and brave. Let's go up into here. So I'm looking for that one. Disney. So what we just saw in cocoa, you see how we're above that level? We got to get a body close. So this hour has to close above this level. And then we're using this sell side liquidity level as the line in the sand to go. That's the old sell side liquidity. That data point, I want to see that whole price. Ideally, I'd like to see it just tap this high here and keep going all the way down to that candle's close. And then look for upside, which would be right to be targeting this area right here. To be like 70 some cents, and if you can get above that high, then look for targeting this breaker here. And if you can get through that, then you got a little bit more open room to run higher. This could still be a bear trap or bull trap here, so I'm going to see it start climbing. If it doesn't, if it pops back through this level, takes out this, takes out the mean threshold of that order block there, and then starts running, I think it's going to come back deeper into that range. But bullish for now. Ford still looking for Ford to break through this level. If it finds support off of that, then I'm not interested until we get above here. Reaching for its highs. $132.96. It just reaches 132.96. It's at 132.952. It just pops up above all those highs. That'll fill this little gap in over here. Let's just pop up there and then start creating a wick coming back down. We'll see, unless we get a nice little punch through there, create a little fair value gap, come back down, find some support off this, or create a institutional more flow entry drill, or a 50% of the wick, 50% of the BISI. That would be over the next 3 days or so into next week. So this should be a nice bold candle here if this is consolidation getting broken. And we'd anticipate that happening if we just tap that and roll over and start really booking it for the downside. That'll give this a chance to grow. Silver looks like it's got more downside. We got to get back through this breakers mean threshold for me on a close to start changing my mind. Otherwise, you go bearishness, bullishness, breaker that's blocking it. So if we just return into that breaker and see it roll over and take these lows, or whether or not it breaks through that breaker, comes back, finds some support, that little tiny swing point here, and then start moving up into higher ranges, aiming for that upside objective we had from weeks ago, 36.22. So we got the bull trap. Going lower, going lower. Take out the candle, the last candle to the left. Back to it, come lower. There's 341. I think Hadi was calling for 341.75. Nice little call there, Hadi. So we'll see if this holds price now. And we start to roll over and come back down. Or whether or not that punches through there and start reaching back for a number. The next downside would be 335 to 333. See if it gets down to this 25% mark. That area is holding price. Oh, they are, those volume balances are awesome. Three, 332 to 334, so 335 is a nice little place to hit. Let's see what we get. Down to 3395. That's right into that first presentation fair value gap after midnight. Morning, Russell. Here's the open. Three, 338. There's the mean threshold of the 5 minute. We're right through our the objective we were looking for. So that's sweeping right there at 312. Well, let's see if that reverses in here. I wanted 308, 307. What was the one I was calling last night? 313 to 308 or something like that, 309. Let's see if that hit it. There's 307. There's through that now. We're digging into here. We've got this whole wick here. So if we close, we're through that main threshold now. This would be a sizable run, so see something here. 301. See if 301 holds, and then 285. This is my graded response right now off of this. We didn't have a fair value gap get above there, but we did have a body get above. So its mean threshold, you want to see that hold price, and let's see, look for any chance for a reversal here. So if that gives way, then you got your C and D level here. If you lose that, then we're looking for a run down deeper back into this range here. Get back above here and here. Get back in sync with that going higher. This will put us right in here at a 4 pattern. They're really pushing that Tai Chi, eh? Suddenly, Tai Chi for men. We're using the open range, midnight open range, to go lower. Now I'm just waiting for that 302 level. See what kind of reaction we get off that. Welcome to the 9:30 chop. It starts chopping up on us. How's DAX doing? Is it behaving itself? Be a little more specific with the German side of things. Yes, yes. Bounce off there, back to here. Now let's just see that keep climbing through here. See how behaved they are? Way more behaved than choppiness. They're still hitting the levels, but the wicks just decimate precision. What's our gold doing? Yes. Looking for that little premium level here. Now see it hit the consequent encroachment of that. Right there. Boop. Now turn around, start coming back lower. If it's really got intentions of getting above these equal highs here, I want to see it pop up here, close on a 15-minute. The fact that you've got a wick in there, I like that. Right into this candle's body. It's open. Get the body to close on that and then start hunting for this mean threshold here. at 34.33. If it stops and starts to come back down, if we stay below that level, watch for a potential run back into this imbalance in this last closed candle here. And its mean threshold lines up with the consequent encroachment of this busy. That's the top. And we'll see how it acts inside here. Oil. Still want it to come lower. Take out that low. Hit these equal lows here. Yes, a nice little kickoff. Let's see it get back above this premium level here. Morning, Ali. There's the premium. Take that mean threshold right there. I'm looking to load some more down into this inverse, this first presentation fair value gap back here again. No, I don't want to revisit that. So I want to see that start climbing higher now. Or takes up my stop. I think it's going to come back into this first presentation here. That's right on the mean threshold there. So you want to see it tap this and then start really going with the fact that we're wicking back into the candles. I wouldn't want to see any more than half the wick at that point, but we're already through it. So my guess is we're going to come back deeper into this range here and get a better position on down here. Or wait for it to take that candle's high at 363 and then take the high and then start climbing up higher. Let's get out of this consolidation here. This would be a cam model 3 here if you can get back into 50% of this leg. Puts us right in that box, puts us right in there. Let's get rid of all this stuff here. So see how it's hitting this level and it's not getting the lift you want to see. It just come down, tap it and leave. It's not acting the way we want it to. So we're looking for a return back into this SIBI, which is also this first presentation, all the way to 326. So we already ran out the bottom of that. It's got to lift off from there. Let's get a punch up now. Let's go. That's 363. It's the reaction you get off that level. Wait for it to clean up, tidy up. Looking like a long right now. Yeah, right off this, all the time this is holding. That's good. And we've bounced off this first presentation fair value cap right here. We just tapped it. That's a nice little reaction. And we're still inside this breaker here, right to the very bottom of it. So I'm okay with that. Next one's right here. We get through that 363 level on a close. Look for the highs, then the mean threshold. This candle. So I'd like to see a big body get up in here and use this little space in here as support to start running for the premium box above us here. The fact that we're just going sideways, making that little bull flag, run down, take out the lows of all the people that want to go high, quickly sweep them, and then take them higher. So all these people want to go short, and they think that this is the ceiling and it's holding. You want to take them short and then run back quickly against them and take them out. So that area there is pivotal for me and here. So I'm stuck between those two levels now, and we've got some support here that's given me like a 52% chance of going higher. Agreed, Hadi. And that is exactly the place we're looking for. Big bold candle, let's go. Give us that little fair value gap up there. Well, we asked for a big bold candle, but you got one right there. Okay, I find support at 830 now. Take a long off these highs. You may still get an institutional order flow entry drill right here, or a 50% return right here. So first target's here. We now got a body above this candle. Give myself a partial there. Move to break even. You got one in here. Good for you. That's awesome. Nice. Well done there, Ollie. Well done. That sucker did hold. See how twitchy I get inside here? I still have my stop loss down there. Would have been right on it. Anyway, nice beating yourself up on that. There's the second. Pay yourself there. Stop loss is over here somewhere. I can't get my stop loss out of there. It's literally sitting right on the top of that. We're going to let this run now. Let's see if we can get back up in that premium box. Well, right up to the premium box here. So look for see if we can get back down into this level down here. And put one buy in there at the 830. I like this order block here. It's got to hold now. This one's right here. Stop. Let's put it down here. So I don't want to see more than 50% of this thing get hit either. There's a Cal Model 1 there as well. As soon as you see that reversal there, out. Get back in. Look at this range here, 50% or more. Probably get 62. .62% retracement. Back into a CAM Model 1 inversion. Let's see, I keep going higher now. It's got to get back through here though. Not acting the way I want it to act. Though I'll give it some room to here. This would be nice to see this stay open. A portion of it stay open, and that you don't want to see it get below here. And I definitely don't want to see that fill in. If that fills in, I start to lose my love for this trade going higher for now. I know why that didn't work. Because I have got my orders. That's why I didn't see my stop loss. Internal range. I just hit that little level right there. I'll move, take one out, and move to break even. Right there. Now see if we can get back through this level and this level. Keep going higher. Leave that last one on to run now. So it's a stress-free trade. Exactly 1 year ago, I started learning ICT when he bought out his 2024 membership. My obsessive personality means that it feels like years. Yeah, I started back in 2016, so it's almost a decade. It's 8 years for me already. Or is it 8 years? Yeah, almost 8 years. So I've watched all his videos, and I'm my second time now. Mean threshold. See how we popped through it. Now we're back through it again. So we have a discount box right here. You don't want to see it go any lower than that. And it's popping through it already. There's a small little imbalance right here. Stop losses in, make profit. We already took a piece out right there. If that rolls over here and keeps coming, we're still inside this higher premium, higher range here. So I'm out. Not acting the way you want. So you nibble the piece out. Now some people say, well, why didn't you just leave that alone? Why would you just? Well, because that's a small little internal range. You have to pay yourself at those small internal ranges. Another level would have been the mean threshold of that candle. And then all of a sudden it's come back and taking you out. So pay yourself in there. Come back and tap that level one more time. Now for me, it's got to get back above here. And these candles to start going higher. Otherwise, you're just going to get bashed around inside a consolidation. And we've got this retest at these two levels right here. Well, I came across ICT when a buddy of mine, when I was working up in the oil patch, and he came to me one day and said, hey, look, man, there's this guy. I've been doing this trading, online trading, and this guy does this online course, and he's absolutely amazing at it. He says, do you want to take it? And without even thinking about it, it's what, absolutely, yeah, I'll do it. I'm always keen for more, continue education. We were sitting up north doing not a lot, sitting in these little shacks waiting for somebody to get hurt, and they are super anal about safety. So very rarely would we get these calls. So you'd have countless hours to yourself to study. So I was like, yeah, I need something to study. So I studied. He's like, I said, how much is it? Expecting it to be thousands and thousands of dollars. He says, like $150 a month or something like that. I was like, seriously? He said, American. I was like, oh, that's probably like close to 400. No, I was like, yeah, sure, we'll do it. So I took the course and got into his mentorship, and I started watching him, and literally within a month, I thought I understood it all, and I went live. I was live trading, man. I was hitting live. He had me so hooked, and I watched all of his videos. I've watched everything he's put out there except for his new 2022s, 23s, 24 minutes. I watched some of those videos, and it's a repeat on a lot of the stuff he's already done, which is great. But it starts to get so much, you get overwhelmed with so much information. You just got to literally got to find your model, find your setup, and stick with it. I found my groove now. This is my thing. I love ICT, but I don't need them anymore. I've got my method that works for me. So, those people who are still looking for more information, you can obsess over the amount of information that he's got, and he's got tons of it there, and he's got multiple different ways to look at it. But I don't know, this sounds terrible, but you give me any one of his setups and I'll show you where it turns. I'll show you right where it turns. Any one of his setups. That's a pretty bold statement, I know. It's not bragging, but I think I found the point at which it turns. I found the point at which I can identify when the horse is turning, when you get spun and kicked off the horse, where I failed, right at the 1 minute level, and I can see that on every chart. So if I can see that on every chart and every time frame, I've got an algorithmic setup that works for me anyway. And you see me calling it here on 1 minute all the time. So see how we did not get above that level? We're right back, mean threshold, roll over, take this low, and look that we're ripping all the way back through here again. See that little imbalance down there? Look at that. Stretch it out. This is what Hadid was telling you guys about. Got this little imbalance here, this little imbalance right here. Look at that one. Right on there. Let's see if we see this little guy right here. Nasty price action, yeah. I literally froze right inside that premium array right there. And those people are thinking, it's going to go higher. It's got to break that level. And you're right inside the mean threshold of this as well. So interesting. Right from box all the way through this box and just went ripping all the way through it. No body through it yet, but you've got box to box done again inside that large range. You've run from box entry to box exit, then here again to box exit, and we get beyond. So we're inside that discount box now. You were long? Where were you long, Hadi? Off a cam too? Oh, you wouldn't have, because that would have, oh, I would have took your stop right away. If that was a cam 2 entry, you were sitting right in the mean threshold of that. That would have hit, and your stop loss was sitting just below the lows. It would have ripped through and took you out. You see this target down here. You don't want to see it get below that. Not quick rip through. Clears out all the people that want to go long inside here. Now you're back inside this consolidation from the downside. So you're coming back into that midpoint. So you expect to see that roll over and come lower. If you pop back through it, look for the high again and look for this. There's the market structure shift if we can get above there. We're right inside that midnight open range, the 6 a.m. candle, midnight, that first presentation, fair value gap after midnight. Looks like your seek and destroy day, or is it two-stage distribution, Ollie? I went right through this regular trading hour cap. His 2202 model is a reversal model. 2024 model is based on the first presentation, targeting new week opening gaps, highs and lows. The models are fire if you can wait for the GMC drops. Yeah, sometimes he drops them in a 4-hour video. I remember one video he did, I think it was a September 2024 video. He dropped this bomb in the last 2 minutes of a 4-hour video. It was like, holy, that's an interesting point of view. And then you go, gem. It was just a nugget for sure. Do you guys label screenshots on these models by chance? I've showed you guys my binders of screenshots, and I've got video or audio files, not audio files, picture files, huge number of picture files of screenshots I make with an analysis. Hundreds, if not thousands over the years. And if Michael's doing a presentation and I look at it, I literally go through his presentation, screen capture that whole thing, I put notes in there, and then I make a binder out of, put it in the binder. Back in the day, we used binders. Look for this little tiny line down here. And then, and now I just put it on my iPad and use it when I go traveling. So now I've got an iPad full of charts and notes that I've had in the past. See that little reversal we talked about here? Looking for that little line right down there, targeting this low. We're below this level now. Now you come back into that level. I'm expecting this to take these lows out here now. See how we're on a 4-hour chart, we're just banging around making a nice bull flag here, right? But that 4-hour chart, man, I tell you, every time we come back into that new day opening gap, you can still catch some runs. So look for a run all the way up to right there, 341. You want to see the body stop right there. Even that wick through there right now, through this main threshold, we're going higher, coming back into this range. Watch it, we could retap this guy here. Main threshold of that candle. I'm stuck between here, main threshold, and this inversion. I think it wants to go higher. when you say box to box, is that fair value gap to fair value gap at the tops and bottoms? Yeah, it's the opposing one. A box to box strategy is a SIBI paired up with a BISI. Pull your range and look for the BISI that's above from the SIBI that's below, and that's my box to box, as simple as I can make it for you. And then my range extension model is the BISI or the SIBI that gets broken to the upside. Expectation is mean threshold, rejection block, old high, and range extension. And then there's like 3 other little models that occur after that BISI to give you an opportunity to catch that run to go higher or lower. So now we've run above this level on a close. This whole thing here becomes support to go higher. I wanted to see that hold, but it didn't. We're still inside this bigger one here. Right back to that little imbalance right there. And you go right there at 326. $326. Now start going higher. And now we've come back into this one here, so 338. It's going to pop back through that level. If not, that little imbalance right there is going to give way. We'll lose that 326. Mean threshold, rejection block, old lows, this imbalance. So if you're staying on the horse, he's spinning around, bucking and trying to throw you off. So between here and here is where we're sitting inside the smaller range right now. So we go from box to box inside this. See how this is like be your SIBI or your sell side imbalance, which is also your, I call it, it's not a SIBI, but it's acting like a SIBI with the box to box strategy. Hold and then run to the BISI. There's the BISI right there. Done. Box to box. Now you want to see a range extension, mean threshold. Use this level as support, or pop straight through here and use this last candle as support to run to the next BISI imbalance. Now I really want to see a big green candle. Anyone long? Not at all. Not now, still waiting for the A+ setup. Yeah, you don't want to be chasing pricing here. Even though we're calling some precise levels, it's high resistance. So wait for something clean. Wait for your setup to come in clean. Don't push a trade. That little guy there is still not touched yet. And as the D knows, those little imbalances, they can be important. So that there, we're above it. Now we're below it. Here and here, between these two imbalances, these two volume imbalances is where I'm looking for price to be bouncing around right now. You've got to get out of these mean threshold here and mean threshold here. So you got that one, this one, rejection block. So you see how those PD arrays are, you're bouncing off of them. So you're back inside this discount one again. Box. Mean threshold. Watch for the mean threshold here to get hit. Right there. Now if it runs through there, good. Take out the downside. Look for this little fellow right here. Now if we pop through that guy, see if we come back and find some support off of this. There we pop through there. come back, find some support off of this, and start running for these lows. Just watch where the body ends up. Choppy. Darren, could you look at the SW120? Ooh, SW120. SW120. Is that a 1 or an I? SWI. Is it an I? This one, Switzerland. One's a Switzerlandy. That's German, I know. I see this one here. Index. Let's have a look at that. Support. I kind of, do we hold on this candle here? Look at this little candle. I will go right here and right there and see if that holds your price now. And this consequent encroachment and the mean threshold of that down close candle. You want to see that whole price. You don't want to see that starting to give way, rolling over here. Because you got to change in direction, market structure shift, take out that low, come back, find some support at this, and you're starting to come back into this range again. And that's when we talked about that range, run back up at 50% or more. That's where it is. Anyway, let's get over here. So look at this. Switzerland. Oh, yes. Okay. So right back to this new day opening gap. If you see it come back and tap this new day opening gap, all the way into the consequent encroachment of that for this day or 4-hour market. If I was looking at the 4-hour market, I'd be looking for this to run back into here. So you go down to the lower time frames and look for a reversal. There you go. So you're looking for a retap of this. Mean threshold of that candle on 15-minute. So I'm looking for a retest of this on the downside. So if we get through here on a close, come back, use this as support to come lower. Look for the mean threshold of this candle, and then a retest of this here. If you can get back through that, look for that as the test to come lower. So I do like the fact that we popped up above the gap, a small little gap here, tapped it, went higher, and the fact that you got a reversal right here on a 15-minute chart, if you come back up, you've retested the high of it, and we've gone lower. So I'm looking for this to get taken out here on the downside and come back into this mean threshold, and then potentially lower than here. So using the principles I show you every morning, monitor that. I'd like to see this continue coming lower and use this box as support to reach into here and then wait for the reversal. That's what I'd be looking for there. We don't over here. Look at that. Tell me that area is not sensitive there. All the bodies closing on it and opening on it. Cool. Rejection block. Did you pay yourself at rejection block? Find some support at this and start pushing higher. Does that help, Ali? Russell, if price closes below London low and hourly, I will change my bias. So if we close below 286, we close below 286, or even if we close below 308 and come up high, come back into that, this level here is important for me for 288. So now we've closed below this level here. Use this as support. So look for here. That'd be nice to see that stay open now. Come lower. You can come back to the edge of it, fill this fair value gap here. And I really don't have anything else other than if this goes super choppy, a run back into here. A retap of this first presentation fair value gap again. But I want to see that leave right here. I wanted to see it stay open. It didn't. Next one is a fill. Good. Keep coming now. Watch, look for 288, 286, somewhere around there. Thank you, definitely helps. You're welcome, Ali. I don't like shorts when leaving those relative equal highs. You'll know if the relative equal highs are going to get taken long before they get taken there, Ali. You'll see that down on the 1 minute chart here, or 15-second chart if you're watching it down there. So this is the continuation on the downside. You'd have to be breaking above this candle's high and using it for support to come back up into that imbalance here if you're going to go higher. Otherwise, still short all the way up to here. This whole imbalance right here, I don't like this being so big and so far away. If we're starting to drill into these candles again, this mean threshold, for example, that's that retap of that imbalance we saw earlier. That will line up with the mean threshold of that candle for a push lower. Come on. See this last down close candle here? Mean threshold. Equal lows. Looking for 266. Whatever that candle's high is right there. 285. 285.25. So right here, it's good enough. We'll see how we act there. Five-minute shows institutional order flow entry do. Where'd you see that? This one right here. Indeedy do. Well, if you miss it on a 5-minute ollie, go down to your 1 minute and wait for that, the next one. So if you missed it here, which would be lined up with right there, so you wait for market structure shift, trade back into the low. You can catch right off the top of your inversion fair value gap. You can catch your short there, reach for here. As soon as it hits that level, pay yourself. Comes back to that level, find support. You want to see it push lower, which is what we're calling for. So don't worry about those upper highs yet until you see a reversal. Then you think, well, okay, those relative equal highs that we were worried about, now you can start targeting them. But otherwise, you've got all these levels that are showing you a continuation on the downside. So just stay on the horse. There's the 286, done and dusted. So you pay yourself there. Now the next downside, you want to see it get into what have we got for our next downside there? A D. What have you got marked off? So we're starting to get into this imbalance here again. on the 4 hour, which is your CIBI. I don't know why I put it there. It's not there. It's right up to there. That's your 4 hour CIBI. And your consequent encroachment of that CIBI is that also that little imbalance you got down here. So that would be my next target for 229. $229, your next target. Are you staying on the horse? Are you recognizing these terms? Now on your ES, I want you to see this on ES, which chart is that? That's a chart. See how its mean threshold starts to get traded through? You don't want to see that mean threshold get traded through. And as soon as it does, then start looking for these two targets that weren't hit. This one literally closed right on it and opened on it, came back, gave it a little tap, went higher. So this is a discussion I've had with you guys in the past about you decide whether your model is a tap of that high, a close on that high, you'll take it for continuation, or you want to see a body. My rule is I like to see a body get above it and then use it for support. Just a simple close on it it's not a go for me. So if you see this one here, body trades above it, we didn't get a retap of it. Now when you lose that mean threshold, expect a tap of this. And if we close below here, look for a run back down into that one there. And then we're looking for, if we're looking for a range extension, I'm looking to see if 297 gives way on a close. So we've got reverse starting to happen here. We've popped up above that level. This has been the ultimate 4 hour bull trap. See how we've got no body above that level yet? No body on a 4 hour chart. And then when you lose the mean threshold, you go, we're running back into this range. Pull your fib tool from low to high. 50% puts us right through that level and back into here. So watch that. If we come back into this level here, look for a run back down lower, and we're now inside this range. Bull trap has been tripped and it's chopping up feet, if that makes sense to you guys. So the same thing we look for on a 1 minute chart, 4 hour chart, same thing. So again, looking for that 229 level. Remember, I wanted to go higher. Got to be prepared to change up your thinking when you see market structure shifting. You've got to be able to recognize when it's shifting and when you're on the wrong side of it, and not marry the idea like I wanted it to go up here. I was all keen on it getting up there, and it went, nope, I've changed up my mind. Well, I'll see that when it starts to break structure. I'll see it when it starts to hit this level. We wanted to see it break that high. That gives us more support for it to go higher. And then the next target would have been aiming for that mean threshold of the candle. We're already through that already. We would have been well on our way for that old high and keep going higher. But because our premium box was hit, we did not violate it. We did not get a range extension. We pulled back deeper into that range. And when we took out that discount array, Then we're looking for a continuation on the downside. Take out the downside here. We've retraced back into this consolidation. Take it out one more time on the downside. Use the first presentation fair value gap to go lower. And now you've got to be in sync with the market. Otherwise, you are getting your ass handed to you, which I've had so many times. So many times. And you've got to be able to swallow your ego, swallow your pride, and say, I'm on the wrong side of this chart, and get back in sync with it. Agreed, Hadi. I like Hadi. He's got some great wisdom. Wait for your setup. Even this chop, even though we were calling it, every time we were trying to stay on the horse, we're staying on the horse here. Still, just because we're staying on the horse doesn't mean to say take the trade, because this is choppy. It's starting to smooth out a little bit more now, but watch right here and watch right here. So we've come deeper into this range. I don't see anything there on a 4 hour. Do you guys see anything on a 1 hour? I'm looking for a target objective now. Do you see anything down there, Hadi? Over here. A box, T-box on a 5 minute. Box to box in the 5. We're through that with a wick. Nothing else here. This is super well delivered. So you want to see an acceleration, like a big acceleration coming up here. See how we've traded through this level? Now prepare yourself for a change in direction. We're changing state of delivery. So now we want to see if we get a market structure shift. And use this big wick. And I want to see half that wick hold price and start pushing for this mean threshold and see if we can't start getting up on top of these order blocks here. See a retest of this. There's the first retest. If we close below 271, you're on the wrong side of it. It's still going lower. We haven't broken any highs yet. So another bull trap would be here. See, we're already starting to wick through it already. Mean threshold. Projection block. So watch the 28 seconds here. See where that closes. Then it's changing the state of delivery again below that level. Switching it up. Low is taken now. Now this becomes important for a continuation on the downside. This candle, it's low. There's a 1 sell there. Then the mean threshold. I'll just do all these as sells and stop loss will go up here. Just so we're going to test this theory here. So there's the first one. There's the second one. That's the mean threshold. And then retest of this here. it's stronger if it just tests right here and then rolls over and goes. Best is there, better, good, nice, not so good, break above, wrong side, get out, pull your stop loss. That's my fail safe right there. So stop loss is there, fail safe is right off this candle here. Look at the 15-minute charts as a D. Yeah, we've had a retest, literally open and closed on that low. Bet you that one's actually below that low. No, open and close on it, keep coming lower. What are you looking for, Hadi? So we take out that low. I'm going to move to just above this mean threshold. I don't want to see this get retested again now. That has to hold for price for me to go lower. That's really nice right there. Came back, tapped the low, just keep coming. Really strong is just keep coming right off that low. Now, if you had a bunch of trades on there, I'm definitely going to go to break even plus zero stress trade now. What do you want me to look for on the 15-minute, Hadi? This was pretty much the open close right on that low, extended lower. You wanted to see it come back and tap it, right? And then come lower. That's the 1 minute tap. So it's a stress-free trade now. So if this does pop through here, look for mean threshold, the low or the open, mean threshold of this. Sorry, consequent encroachment. If I try to get the terminology correct, consequent encroachment. I don't want to see that at all, though. That little tap there is all I want to see, and look for continuation. What am I reaching for? There's where you want to get paid right there. One, and that's where I want to get paid next, right there. So my take profit will sit right in here. Right inside that guy right there. Make sure that's sitting right in there. Yeah, right there. I'm going to chase these candles down. So I didn't load the extra one on here. And then there would have been one there, one there, one there. So it depends on how much you want to commit to putting on your trade. A little imbalance right here. So I'm basically chasing every candle down now because I'm getting close to my objective. Now, then you want to see it run through that objective, come back, find support, and then I'll look for a continuation on the downside further. But all the time that the price is supporting going lower, then you're in a stress-free trade. Show Darren, look at 50, show me 244 cam model. Oh, you're looking for a 15-minute cam model. Yes, I saw what you're looking for. You're looking for a retest of that level. That was a tough one because you'd expect to see that didn't come in there, right? Because you saw on the 1 minute chart, it had already dropped below that. It gave you that retest right there, which we were talking about. So 1 minute gave you the retest. if this is booking it through here straight down, you had that one opportunity to catch it. But if you stay on a 15-minute chart and you trade on the 15-minute chart, and that's all your expectation is for it to come back there, and don't see that there's a continuation on the 1 minute, you'll miss that opportunity here. That's the joy of having a 1 minute chart. So now I've hit the objective, and I'm happy with that. So a little bit of profit, hit an objective. Now we'll see what kind of reaction we get off of that. It's not trying to predict the lows, it's just hitting that objective. And then if we see it trade through it and use this as support, or use this as support to come back into, there's also a little tiny imbalance in there. And the D might get his wish now for us to come all the way back up into that low right there, and then roll over and come back lower. So we'll see how this candle acts. So when it got to here, Hadi, and you saw that, you go, oh, I want to see that low get taken. And do we support price, or do we catch a reversal here for us to go higher? So here you saw this slam down. You go, okay, so that's the pop down that I'm expecting to see. Now, is that just a stop run and we're going to go higher, or do I expect to see that hold price and keep coming lower? You got an order block here. You want to see that sucker act like support, and sure enough, it does. Then you can say, no, I'm going even lower still. Place it. We'll wait for the next opportunity to get in. Wait for a fair value gap to form below. As soon as it takes out that low, wait for your first fair value gap to form. Trade through it, come back to it. Yeah, you see, you wouldn't have been able to get in on that one either. But anyway, that's what I was looking at there. So you typically want to see this first fair value gap on a 15-minute chart now that forms below that level, come back into it and go lower, and it didn't do it. So wait for the next one. Just keep waiting for the next one and the next one and the next one. That's holding. Changing direction. Order block. Mark them out on your chart as soon as these cities form below all the lows. And then look for the candle to the left of it, right there. I went 146. Try not to chase price, just small gain. If your setup is not chasing price, you shouldn't be chasing price. Like this right here, bear trap again or bull trap again. I want to make sure this, if that taps it now, you want to see it leave. It's got to tap and leave. No wicks, no nothing. It's got to go. Come. Keep coming. Don't come back. No. See, you don't want to see a retap. You don't want to see a wick get through there. Otherwise, I'm looking at more bearishness. This was a bull trap. It just ran up inside that order block. Did not close above that order block with a body, so I'm not interested. This here, still bouncing around in here. I'm going to wait and see. Trade below that. Good. Now come back up into that candle's body. So wick, body, all the way back. Same kind of thing we did over here. A retest of that. Same kind of thing. Test the low. Test the mean threshold. Test the body. Right here. See? Low. Test the low. Hits it. Keeps coming. Same kind of setup there. Now I want to see that come down further through here now. I didn't take the trade, but that's exactly what we're just calling right there for a continuation. So now that you've got a new low, move your stop loss to break even and wait for your next level, which is rejection block. Pay yourself there. And then wait for half the wick which is what we just hit at 204. Look at that half wick right there, 204. Bang. Either pay yourself there, wait for the next one. I would have only had one lot on anyway, so that's where you got to chase it down. Get yourself to break even, because now you got this new fair value gap and a new one here and a new potential market structure shift, right? So every time you see these forming, you think, okay, this is a potential for a reversal if I can get back above this level here. So I'm always looking at these upside candles as potential breaks, especially if there's a swing in there, breaking market structure. So now you look for the next one, which is 188 on the downside. So that one where I took that mean threshold there and then got paid, wait for that little shift to occur, tap yourself there, you're back in for a short. We're going to kept on going there, and that's the difference between here and here, and you're still back in sync with the market coming lower. But I didn't take it. But at least I explained it to you so you could understand. So there's your 188. Pay yourself. Next level. Take this into quarters. 25, 50. Look for any opportunity to target those levels. Break this into quarters. There's 75% right there. So pay yourself at the low. Look for 75%. Either pay yourself there, or just have your stop loss being trailed behind. If you're using a take profit model 3, you're making sure that anytime you see a new break in price on the upside, you want to make sure that you're, if we close above that level, then you say, I'm out of that trade. That's a take profit model 3. So 166. This session is amazing. So many gems from you, Darren. You're welcome, Rome. You are welcome. Hit the like button if you like what we're doing. We're here every day. Subscribe. Tell your friends. Join the club. You got a bunch of people here that love and adore. Thank you. Right back at you. Right back at you. Yeah. You can, we've got a club, a little Telegram channel. You got all these great people on here that will help you out. And they'll, if you're just starting out trading and you're learning ICT stuff, they've got a great bunch of people in here that are willing to help you out and take your trading to a whole new level. We're here to show you precision. I'm here to show you how to stay on the horse. And hopefully it's going to improve your trade setup if you have your trade setup. If you don't have one, we'll show you ours, mine. Anybody who's interested in sharing their techniques, get on the channel. We'll talk about it, and I'll come on here and I'll do my best to explain your setup. We're not into that hoarding our little technique, not tell the world about it because we're being greedy. If you've got a good technique and you're sharing it with people like Michael is, it does not affect the markets. And you're doing something good. You're helping people out. We're all trying to get ahead here. We're not all in this giant competition. We're just here to help each other out. So there's the 166 level, right on the money, 166. Boom, 166.25. There's the 75%. There's your next target. See the kind of reaction you get off of it? They are sensitive data points. Now, if it just rolls up and then drives through it one more time, that's like a drill. Pull it back, get all the crud out of there, and then drill back down again. Pop back up, clear out all the crud, and then drill down again. And now we're looking for 138. There's the 140. I think that's you out now, isn't it, Ollie? You're asking for 141 or something? Okay, we'll just give us a little tap at 138. Come on down. Look at that, right close. We're like 140, big figure, 00. 138 puts us right inside, strangely enough, inside the 1 hour. This first presentation, fair value gap on Monday. Its consequent encroachment. What does it put us at? 138. Interesting data points. Do they line up? Is there some strange luck factor going on here? Is there an algorithm involved? You decide for yourself. Over and over and over again, Hadi. Over and over again. I bet you're happy you popped in here now, hey, Ron? There's some good stuff in here. Give me the 138. I want to see it. Just hold here. And now watch this. When you watch this candle and it sits here like this, it's just building up steam. Building up steam, and just, you want to see it just blast right through here. When it taps it and you see it kicking off real fast, it's hit its data point and it's exiting quick. It's running back and taking all these people who were short, and it's putting them under pressure now. It's squeezing them. Look at that, 138.75, right on the beezer. Perfect hit. 138. This is 138.25. Did I line that up perfectly? Make sure I got that right there. And right there. 138. Big figure. 138 on the button. So now I want to see that one. Now that level's gone. I want to see 25% get hit, which is the 110. I want to see it close below here, and then 110. Start aiming for 110, and then looking for 081. It's got to drive. It's going to push down hard now. Let's see a big leg happen. And be careful, because like Hadi was saying, 11 o'clock. This is the 11 o'clock push, so it could start pushing right off of that 50%. So we're looking for any opportunity to see a change in direction here. So if you just line up your charts, put in there, we say we've hit a level on a higher time frame that we're expecting to see a reversal or a kickoff of, right? I want to see it drive down more, but hey, be prepared to change your mind. If I get a change in direction here and a market structure shift, or this candle to the left of the SIBI, watch that get taken and watch that level provide support. And then you start looking, pulling your fib tool from here to here, 50%, look for your internal range liquidity hunt. The fact that we've opened below, come back up inside this, I want to see this keep pushing lower. Let's see this drive down to 10 or 110. And I'm not interested in trading this until we get above that candle. Because remember how many bull traps are sitting right here? We did not take out that high, ran lower. There was a little tiny imbalance here. We did not take out that high, we went lower. Change in direction inside this there's not even a small range here. It would be this one here. So that has to get taken to the upside for me to come back into that range. Liquid R, good to see y'all. Either way, definitely missing this community past CPL months. Glad you're back. Thanks, Liquid Raider. Liquid 3. Thanks. Rom, I must have done something good in life. I found your Telegram channel. Well, it's there. So I'm glad you're here, Rom. We're happy to have you. Let's go, Rom. It's you, Hadi, right? Yeah, that's Hadi right there. Yes, sir. Let's go. We have also hit the cost control with the hourly. That's right. If you ask me, just follow him. Darren is the best trader I've ever seen. Ah, you're kind, Hadi. I'll send you the check later. Looking for a long. I'll buy lunch when we meet up, Hadi. Perfect turn at that level. Wait for your A+ setup. I love the way Darren explains every single candle, every piece of his thoughts. Fantastic. Even a newbie could learn without knowing ICT. Oh, that is kind of you. Thanks, Ron. My trading is leaps and bounds better when learning from Darren's experience. Thanks, Ollie. You've got a great little setup yourself, my friend. Watch that bear or bull trap. Look, see how the mean threshold's holding? Look at that. Always look at these key levels. Each one of these candles, it's low, it's mean threshold, it's open, it's mean threshold, it's high, or it's close, it's mean threshold of the upper part of that candle and the high. Those are all the levels inside that candle I look for, and I say, where do I want it? It's got to freeze on there. If it freezes there, great. Does it keep coming back down below this candle? There's our bull trap. The wicks can do some damage. I just want to see whether or not the body does. Where does the body stop? That's important. The wicks can do the damage, as Michael said so many times. So now what we've done is we've traded above this level. We've got a turn point at 50%. We've got a turn point happening. So we have a change in the state of delivery. And now it's holding price right here, right on that little button right there. It's holding price right there. And now I want to see this climb through here and take out that candle's mean threshold. And takes out the high. And I want to see a body form above there. Ideally, I want to see a fair value gap form above there. So watch this candle. Like Hadi says, wait for your A+ setup. Price has been on a mission this morning, dropped all the way to the weekly open for the 22nd, then previous first Prezi. Love seeing it. Yeah. Show me love for Darren. I got one thumbs up that I can see. I'm hoping there's more. We are 1 to 15 minute first presentation for value gap of the week. Look at this regular trading hour gap down here. Ooh, delicious and nutritious. Can we gun for that after lunch? Perhaps. We see this 11 o'clock retracement on the last 10:30. Expect to see a run back up inside here. I want to see this hold now. Come on, come on. Don't jump the gun. Wait for your setup. I know some of you are just itching to get in on a trade here for a reversal at a perfect little turning point. It's like saying you can't predict the lows, right? Look how close we've got. I know it's dangerous to even imply that we can pick the lows, but we're looking for that low, a key level on a higher time frame to support price. And now we're seeing a change in direction. I want to see this provide support. Now you can get back on board with getting in sync with the 11 o'clock return. We've got a macro occurring now at 10:50. There we go. There's a pop above. Let's hold that up there now. We don't want to see just wicks. I want to see a body. Some of you may be into wicks only. That's fine. Have your method, whatever works for you. Now your fail safe, your stop loss would be sitting right here. Fail safe for me would be, I don't want to see this. Now that we've revisited it a bunch of times, I don't even want to see this mean threshold get taken. If we get a close above this high, I don't want to see that mean threshold get taken. If it does, I'm out. My stop loss is here in case it rips back against me. So watch right here, and we'll start loading up one at a time here. 34 seconds. Now, one of the earlier kind of things I look for, an early indication that it wants to go higher, is if we get a body above this level, not the wick, but a body above that, keep your eye on that. For now, for the more precision level, you want to see a body get above that high. See, look at that. It'll mess with you. It'll sit right on there and say, no, I'm closing right on it. But watch this now. See how we've got a body close above here? Watch a potential retap of this and go higher. So just watch right there, that level, right at 177. Bink, tap it. Now see if that holds. I want to see that hold. If not, look at the mean threshold of this candle. See how that 177? Now I want to see that push higher. Go, go, go. We still wait for our body to get up here. This is just something I've been watching, I've been more observant on lately. Before the wick gets taken, I'm trying to zero in even more precision. There's that 177 again. Nope. And still no body above here. That right there, no game for me. Keep it simple. Wait for a body to get above the high. Right there. So you'll see me go, I don't even want to see it come back like that. That right there, you wanted to see that open and just keep going. It did not. So as soon as you see it pop through the mean threshold of this one, we're back revisiting this again. So tap, tap, tap. Those three levels there. So there's a 1. No, I'm not going to take it because it's a potential bull trap still. We got to wait for a body to get above that. So this was your retrace, test, wait for the candle to the left to get traded through. Because we've already got this one here where you trade through, you get your opportunity to go long, take out that candle's high, pay yourself there, and now it's coming back against you here. So I'm kind of watching in here. Now you don't even want to see a wick pop through there. You just want to see it tap. Because if it does pop through there, which candle are you looking for now, Rom? This guy right here. It's open in its body. But I don't even want to see so much as a wick get through there. Come down, tap it, and start going higher. And if you stretch it out, you'll see right in there is the premium box to box inside a small, tight little range like this. Right there. See it? Hit it. Box to box. Done. Now, you're going to see it close above here. Use that little imbalance there. Mean threshold. Good. Go, go, go. Yes. There you go. And to the races. Okay, good. Now we're getting a body above here. Now we've got this high taken. Get a fair value gap forming up here. So we want to see the next couple of minutes with this forming a fair value gap here. And I want to see this act like the 50% of that. So let's watch. This is kind of like the precision that you're looking for. 50%, right there. So I want to see this go up here, create a fair value gap that stops right there at 194. Wait, I want some leg room in here because the next one stop. Now I'll come back, create a little tippy tappy. Or if it drops down all the way into here, I'll take that there as a run as well. Now we've got that run above that high. 194. Come on, stop right there. Good. Oh, now it comes down to there. There's 50%. Wait for that 27 seconds, and then we wait for an institutional order flow entry drill here, all the way here, tap this old high, and keep going higher. So that's how you can predict, or you'd like to see if you can predict. If this is the mean threshold, especially if you get a candle that forms above like that, creates a fair value gap above that high, institutional order flow entry drill here, all the way down into consequent encroachment. So you kind of just take that level, go from the low, and that candle that's forming and say, if that was 50%, I'll start pulling this up here. That's where I want my, I give you that 9.4 level. That puts us right on the 50%. See, this is where I had it originally. Right there. Right on that 50%. So I'm expecting a fair value gap to form up around this area here, and it did. So now I'm looking for institutional order flow entry drill, and I'll just start adding as I go. So I'd look for one here, and one there. I don't want to see it fill. I want to see that act like a breakaway gap and start going higher. You see what it's done here is it's come right back into that candle there. That little higher right there. We're inside this one. Now, if this candle continues to run through this level on a close, then this becomes my area of interest. I'm not worried about down here again. That is the breakaway gap. I'm going to use this level as support. And you already, if you're looking at this higher time for the full range, you're already over 50% already anyway, which is right here. So we've got to get below here to get our discount. Derek likes this discount. We'll get into a discount right here. Discount in the 50% range. We already hit 50% or 62% of this. So often trade entry for reversal. Keep that in mind as well, that this could turn into a run lower as the next price leg takes out even deeper run here. But this is the 11 o'clock turn that we're expecting with the macro. Uh, 21 thumbs up, 4 people not happy. I guess not. 4 people don't like thumbs up. Can we press that like button for thanks, Rob. Need to take the low one more time, then reverse. And we enter in institutional flow entry drill long. Need more pullback. Please hit the fair value gap. Yes, that's what we need. There's a 70% option trade entry reversal. We still have not got a body above this level yet, so I'm still looking at this level right here. And be careful because we still have a big chunk down here available, right? And are we, look at your higher time frame. This is that mean threshold. Remember we said trade through it, come back into it, keep coming lower. So you haven't got a lot of room left to fill, which is coming back into this little order block here and that fair value gap. So that's the run up inside this range. And if you can't catch it here, then we can't catch it. We're already over the premium. So for me, I'm not touching it. That would have been the entry there, but I like that order block to get confirmation above it. We did, and now we didn't get a retap, so it's away. That was the entry there. You have to decide for yourself whether or not That's good enough. At 11 o'clock, reversal right on a macro, retap, go higher. That for you is your decision, your macro entry. I didn't get what I wanted, so not interested. We've already moved up into that premium portion to hunt. So if you're doing an internal range liquidity hunt and you're looking to get in on that trade, it's already hit the levels that we'd be moving our take profit model 1 out, and we would have paid ourselves already all the way up to the 70%. So again, premium, not touching it. Oh, it didn't hit it for us with the, it didn't give it to us. Stay on the horse. Look how close we were to loading our first entry in right there for an institutional order flow entry drill. The A plus setup is the one that literally comes up, comes around and takes off, doesn't even give the institutional order flow. That's the A plus setup. A plus, get out of Dodge, come down, tap, don't even give you a little tap on that level there. It just leaves. That's a really strong run higher. A plus would have been right there. Institutional order flow, give it a little kiss. Take Darren and Hadi in for a run on the bus. Somebody stole our bus, Hadi. We're looking for a nice yellow bus and it took off on us. It's probably a blue bus for you, but wait, they say it's still coming back to you. So now your debate is, it's already hit the premium level inside that range. It didn't give us our entry. Now if it gives you your entry, do you take it? There's your entry. Or do you take it? There's 50%. Tippy tap. I'm not touching this. It's already hit the premium stuff. So there's the 75%. Look at that. Leave that portion of, that's what we were looking for over here before it hit all that lot. We're looking for that here to run down in 1, 2, 3 levels and see how it's coming back in. There's 75%. If it fills that and now changes direction on you here, changes the state of delivery, it's now got institutional order flow entry drill perfectly at 70%. Change in direction, continuation. This is the 11 o'clock run on liquidity. So right there, perfect entry, perfect exit, move to the sidelines. You have 1, 2, 3 entries. I gave you the my freeze on this guy here. See how we've traded through that level now? That's why you don't look at that and go, oh, if it comes back and taps it now, I can go higher. No, it's already done its work up in that range. For me, it'd have to break this high and then start looking for a run higher. So now you want to see it break through this level on a close. And we want to see this candle start marching down to this next key level I have down here at this key level, which is 091. Come back, give that little tap right there. And again, you're inside this range. You're already in the extreme discount. You want a premium price to go at a discount, right? You've already ran through a big chunk of that. So you've only got, you don't have really a box to box until you're into the larger range. Box to box. Premium, discount. You've just hit the discount box. Run back up to the premium box right now. Bang, done. Box to box trading in 2 minutes inside that small range. So now you have to say to yourself, so Rom, what you're saying to yourself now is, how do I extend the range? How do I know this range is going to extend on us? I want to see this roll over, take out wherever that lands up. So if that's 50%, 75%, or a fill, I want to see like to like array. So I want to see that go here, and then you pull. High is taken. Now I expect to see this low get taken here now. If we pop through this on a close, then we're back into this candle's low, open, mean threshold. That should clean up that whole little imbalance you see right there, that SIBI. See how we had that little tiny wick pop through? That one's done. This one's being hit right now. Watch that little SIBI there, all the way up to 203. See how we hit the body there? And I always take the last candle, it's the most sensitive. Michael talks about all three of them together. Take the mean threshold of all three. I like the last one is the most sensitive, but you do all three of them. There's the mean threshold right there. And even that little wick through there, I like. Continuation on the upside. Rejection block, old high. Now, just for chop's sake, break that high. And now you want to see a wick come back into this candle's body. This, see how this low wasn't taken? This candle here provides some support now. I want to see a body close above there, otherwise it's just wick. And we're back into this and this overlapping. And when you have overlapping, that means you can argue both directions. You need something more solid, like this candle here, get taken to the upside, find some support at it, and then start gunning for that guy there. Oh, you guys been chatting away there, hey? Just watching and learning from you, D. Good. Inversion fair value gaps. Market structure shifts. Fib tool. Those are the tools of the trade right there. IFVGs, market structure shifts, changing the states of delivery, the fib tool. See you later, Derek. Gonna go watch the Little League baseball. Oh, cool. Still looking to take low and then reverse to the upside. Have a good day, Derek. Take care, buddy. So we've got a body above here now. Look for support here. I'm going to put one in there. Now I want to see that candle hold price. So my stop loss will be one little tick below that low. Though we can revisit this, I do not want to see it. It's already through that mean threshold. See how it's through it? Tap it. Now I'm looking for a reverse in here. So you got to be willing to let this all go now. That mean threshold's gone. We've tapped it. That means we're coming into this sucker here. So I don't want to lose that on the downside. So I'm going to add one here. I'm just using this now as support. I've gone to the consequent encroachment. That's one there. This isn't a copy me trade there. This is just watch. So when you cut through that mean threshold, look for the lowest SIBI to get revisited. 1, 2, 3 levels, and you don't want to see it even so much as a wick get through there. If it does, I'm on the wrong side of it. The fact that we came down here, see there's the bottom of it right there. Tap. We got a wick through it already. Don't even like the way that looks. So I'll give that one little chance here the next few seconds. Yeah, I'm out. It's coming lower. That's why you don't copy me, Rom. We're playing with it like this. Wait. We had a body above here. The mean threshold gave way. If that starts to give way on the downside, we're looking for lower prices. And we've got wick. So the wicks, I want a level of precision. I want to see it tap it and leave. That wick coming through here was enough to clear out my fail safe. My stop loss would have been sitting wherever it was down here. failsafe has pulled me out because I don't like to see wicks. Now, if that reverses and goes higher, that's the damage that I get with wicks. That's the precision I demand out of the market. And you take a loss, whatever. So watch, see how we've got a body above here still? That wick did the damage. Took me out. And it's through this mean threshold. See how that last down close candle? It's through that mean threshold. That's why I wanted to see that one hold and go higher right away, but it didn't. Came back against it. So now you wait for this high to get taken, this fair value gap to get taken. Overlap, overlap, overlap. See how we got this one wants to go higher, this one wants to go lower. Wait for structure break. That's a fill. This is still open. Retest here. Those are the open and close on that level, people. And notice this low has not been taken for this. This low, oops, this low has not been taken for this. But this low took whatever was over there. Change in direction. Support. That got me right there. See how this has come back down and we've traded below it again, and we're coming back into that level. So you expect to see if this mean threshold holds now, it comes lower. Or you want to see a body pop up above here, get through that mean threshold and start moving higher. If you're staying on the horse, that is. And now you start getting into that lunch hour chop. And when you get into this high resistance kind of back and forth action like this, don't play in that. Don't mess with that market. You want nice and clean entries. That wasn't a super clean entry, but nonetheless, it was the entry we were calling for. Change in direction. Right at a time and price we expect markets to turn. Just ride it all the way down till 11 o'clock using your CAM Model 3, or sorry, your Take Profit Model 3 level. How's our gold doing? How's Swissy doing? Did Swissy come down lower? Let's have a look at them. This is what Ali was looking for earlier on a 15-minute chart. We're looking for it to get lower, come back into that level. So it's coming back into that level now. You want to see this candle right here, Ali, hold price and keep coming back into this here. Mean threshold next. Then this, because that'll be the old high. Wait till you get a body below here. It's already got a nice body below that open. Come back into the mean threshold of that. Roll over, keep coming lower. It has to get right back up through 924 on a close before looking to go higher. What's gold doing? Oh, look at that run on gold. Look at that. Nice little range extension. Ah, ba-boom. Off to the races and a new gold high. Gold's acting a lot more cleaner. What is Bitcoin doing? Downside objective's been hit in 15 on Bitcoin since this morning. We're looking for it to run back up into here. It did, held price right on there. A little bit of wick damage, rip through our level here, come back and find some support. Now you want to see that level give way, come back into here, and then keep coming lower. Right back. Premium, discount. Now we're in this chop. This is like not fun to play in. Sometimes the gap could be strong support, not magnet to be filled. So at the Swissy, 50% of the gap it could support. Yes, yes, I agree. You're short over here, Ollie. Well, I hope it works for you, man. I hope it works for you. As usual, my clockwork. I will be right back, you guys. Okay. I want to see us take one more run up above here for lunch. I want to see 12 o'clock make a little punch into here and then roll over and come back down. There's box to box again. What do I think gold's doing now? BK. I like to see it's come all the way back to mean threshold of here. I wouldn't want to see it get any lower than this little spot right here, BK. If price does come down again, I don't want to see it get any lower than that. So this imbalance right here, old one, from way back there. Excuse me. From way back there, I don't want to see it get any lower than the bottom of that. Ideally, I'd like to see it just come back, give this a little tap right here, just sweep below here, tap these old equal highs, body, consequent encroachment. I'm okay with any of that level in here. Loses its luster for me if we start to get through this level and closer to here. If you see it climb up above here, you want to see this candle act as a propulsion candle now and then push price higher. We're going to get a body above that and use the high, the consequent encroachment, and the low or the open of that propulsion candle. And it's going to be a nice little pop up here, not just a wick to go higher. And then I want to see that whole price and forget this here. I like that chart there, Hadi. I like a man who could figure out where he was, where his flaws were. I like it. Well done. Lunch hour lashings now. Stay inside that little box, roll over and come lower. We get back through that box, then I'm back into this range again. For Bitcoin, what's the bank's up to? The banking shenanigans, there's the retap of that previous swing point and the dive. Tapping at the low, tapping at the mean threshold, tapping at the low, discount box. See if we get back below this low here now. Oh, look at the little piggies go now. Abs. Look at that. Let's run for the hills. The pigs are loose. The pigs are loose. This is a good example right here. Popped up above that high. You came back, hit it perfectly. And squeal, little piggy, squeal and let it run. That's good. Now we could see a retap of this, or you just see 50%. There's the institutional order flow entry drill. So 50% would put us right on top of that old high premium, consequent encroachment, so on and so forth. And I want to see this. I'll stay open and just run, little piggy, run. Because now you've swept this high. We've got a body above the high. Is that above the high? No, it's right on it. That one opened. Yeah, it's still right on it here. So we can see a retest of this imbalance down here. I do not want to see that guy get taken on the downside. Or this. I want to see that little gap stay open. Ah, little piggies on the run. Which one were we calling for this morning? This one here? Oh, and it took me out here. Look at that little shit. Came down right to my spot, took me out, and then left. Oh, well. So Coco came down and took me out here. Literally right. It even took me out on a gap. I was above that. My low was below that. Look at that. See how the low is below that wick? That spread took me out and then went higher. Sometimes you can be too precise on your, I don't want to see it go lower than this point kind of thing. It was at 50% of that. Yeah, look at that. Just below 50%. Should have stuck it down here. And then we would have been in a nice little positive pop there. My bad on the stop loss. I should have been more below 75% of that thing instead of being too precise with my stop loss. My bad. Makes sense. You got to analyze where you went wrong. Should have my stop loss a little lower. Disney. Traded through it. Body popped up above. Traded through the mean threshold of this. Sell side liquidity. You do not want to see that get taken. It did. It literally ran all the way through down to the discount again. So premium box up here. Didn't reach it. Didn't find it. Up here. 75%, 79%, it's probably 79. 79%. Breaker. The breaker's body. watching these levels. See all that busy and objective 1 from before as a downside objective. See how we're still using these data points and they're lining up to go lower. We've traded below this one, back into that one. I want to see if we get below here now. Close below here, use this as support. Start running back into this level right here again. This one. Swap the low. Right into the mean threshold of this candle. See that? Hit it. It lines up right with the top of that daily new day opening gap. Hit it nicely again. So now you want to see it start digging into here now. You don't want to see that high get taken. I don't want to see more than half that wick get taken now. See it just keep pushing lower. If that bounces off of here, starts to eat through this candle, then I'm looking for higher prices. And Swiss. British pound, we wanted to see it take the highs. It's taken the highs. These little highs here, it finally busted through those. Good. Got that objective hit. We're looking for this down here for US dollar. It's hit that level that we were looking for. Now we're looking for it to run back down into here at 98.223. And so far it's acting as we expected. Acting as we expected. US, anybody into US CAD in here? You're stuck between these two right now. Still never hit that level. Natural gas. I haven't quite hit the turn. This could just roll over and come lower now. Copper. We wanted to see it come down into here. It's hit pretty close to that. It's definitely hit the consequent encroachment of this. Yeah. Got a nice reaction off of that. I like that. So you're between whether or not we climb up above here and here, overlapping arrays, wait for market structure shift. Oil, we're waiting for oil to reach these lows here. Nice market maker sell model. So when you go switch from a buy model into a sell model, watch for this ROMI, watching closely. So when you're learning about market maker buy and sell models, this is why these levels are so important. When you look, stretch them out, and you can see why these imbalances are so important. You got to stretch out your charts and hunt them. Okay, and that high of that one is right there. It's that one right there. Sorry, let's put it up. Make it bigger so you can see it. Right there. See it? Look at the precision of that. You want to see those. Mark them out on your charts. D sees the light. You guys should see the light. These imbalances are very, very important, and you'll see why they're so important. Let's go right here. Shift. Tell me that's not precise. Look at that. Right back into that level. Look at that. Right on that level. Tell me those are not data points. Not just random little wicks that come up into some place. They are specific levels for price to reach back into. Okay? So keep those in mind. When you start to see something changing in direction, you go, if it comes back to that level, I want to see it hit it and quit it. I want to see it leave that level with a sense of urgency. And boom, it does. Right? Then you say, as soon as this breaks structure here down on the downside, or this swing below this low, we have a market structure shift. Boom, there's a displacement candle. We come all the way back into old low, into this last lowest down close candle's what? Mean threshold. Take this candle, this wick, stick it right on that mean threshold right there. Look at the level of precision that we've got there. So you catch this market structure shift on this massive run in oil, you'll start to look for these precise levels that you say, now I can get short on this and start catching this. And if we break structure here on the downside, then you know you're in a definite market maker sell model. All we're doing is just hunting internal range liquidity from here, and then that little discount box down here, and then the mean threshold here. Look at that. Take this one here, stick it right on the mean threshold of that last down close candle. Look at the bodies respecting it. Wicks do a bit of damage right into, yes, you've heard me say it before, pay yourself at rejection blocks. Rejection block hits it, then starts to pull back inside this range and that larger range there. Fair value gap, trades above it, comes back inside it, bodies respect it, goes higher. You got this last little swing point. We support where it's all supported inside that last down close candle. Body supports it, rolls over, takes the low, and then accelerates. Big time, right? So that's where you start to see big turns like this. You catch them, and if you've got the wherewithal to say, as soon as that low gets taken on the downside, I'm looking for a deeper run to discount box right there. Run back up, takes institutional order flow entry drill, rolls over. I think that's probably just a tad bit short of it, but this was an institutional order flow entry drill right here. There's that little imbalance you see here. Wait for it to trade below it. It does. It trades right back into it right here. See how the bodies are respecting it? Takes out that low right there, comes back into it. What creates a new fair value gap here. We took that low out. We want to see it stay inside this. It does. Keeps coming lower. Now I'm looking for this low to get taken. Gotta go, D. Thanks for everything. See you all tomorrow. See you, Abs. Take care, buddy. Send in the love, my friend. Take care. Close above 153 enough. I will share on Telegram. Thank you, Adi. So we have the macro, lunch macro. Still nothing decent in there for me. So you see how we took this high out here? Then we trade back through this level, find support at this level, then lower, take this level out. You come back, you want to find support on there if you want to see this low get taken. The low gets taken anyway with a wick, trades back into that level, and then quickly rips through, takes out this lower side. Then you want to see it come back to that and continue going lower. Pays itself here. So here's your market structure shifts. Market structure shift comes back inside that SIBI. Use it for support to take out that low. Pay yourself there, and then all of a sudden you see this change in direction. It trades right on the close. That's the open close thing again. Whatever you guys want to play with. Comes back inside, hits it, runs higher, takes out the highs. Pay yourself at that high. Small little tiny reversal here. It takes it out on the downside. We're into the discount box, and we're starting to rip through that now. Look for the open, meet threshold. Now I want to see it close below here and here. And then use this. Before taking that low out, I want to see this level get taken to continue supporting price to go lower. There, peak, tap it, come on down. It's a mean threshold held price. We didn't get a body below there. So this is the level you want to see provide support now and come lower. If it starts to even wick through that, welcome to lunch hour chop. That's a nice little clean level. Now I want to see price keep coming this low. It can come all the way up to the top of that, but you don't even want to see a wick get through it. So just give me some intentions to come lower inside that. Now, when you consider the time of day, and we're expecting a lot of chop, and it's looking quite nasty in here as it is, don't expect much. If it gives you something clean, that's great. And you want to see that come lower now from here. Look at the 5-minute chart, says a D. Let's look at the 5-minute chart, says a D. The 5-minute chart. Yes. Yes. I like the color of your fabric, a D. I do indeed. This looks like a delicious and nutritious. Are you looking? Are you looking? Can you smell what the trader's cooking? Now look at this candle. Look at this. Just that little price leg. Does that line up with anything in particular? That wick. 50% of that wick for the next price leg lower. 961. That holds. That's great. Got our body below it. You come back into the mean threshold of the consequent encroachment of that wick. Beautiful. Keep coming lower now. I'd like to see that just leave from here and no longer run back up. I don't want to see a revisit of this. Ideally, that was a, well, that's a 15-minute chart. Sorry, you said 5-minute chart, didn't you? 15 looked good. That regular trading hour gap looks delicious. We have broken market structure to the downside. That right there, mean threshold, you do not want to see it start eating through that again. This wick right there, stop. You do not want to see it go up higher than that. It's got to keep coming lower. Otherwise, you could get one of those quick runs back up through here. That's got to stop right there. 153. No, don't go back up. Yeah, I like what you're looking at there, Hadi. It's good. See, we're back through that level. This is my concern on the 1 minute. So your 5 minute, you wanted to see this here drop below it and then come back to it and hit it and go, not this move back up again. So when you're watching on your 5 minute, go down to your 1 minute and say, is the 1 minute acting the way you want it to at a level you're expecting precision at? And it's not. So I'm already not liking that. We're already through half that wick already. So I don't like that. We're looking for this premium above here again, and I want to see the market structure shift here. We're seeing if we see a small shift here, next, take out that one, next, and then we're looking for a run back into that order block above us again. So again, lunch hour, not clean, right? You want to see price close above. I would like to see price close above 1125 candle. Why that one? The 1125 5 minute candle? Gotcha. Yeah, there's a small imbalance there. I'd like to see that close above the 1125 candle. Yes, indeed. Hadi. Yes, indeed, sir. I do like the color view fabric. And then you're looking for 187 to 195. 187 to 195 would put you right in our premium box. It's lunch hour. Be careful. I'm not even touching that. That's nowhere. That's not clean for me. And I don't want to encourage you guys to trade during a lunch hour where you can get beat up pretty bad in there. So just be real careful if you guys choose to trade that. You're looking for some serious precision there in a choppy market. And you're in a small range in your 5 minute. So just be careful. Better to practice this and watch, in my opinion, for what it's worth. You got to change above here now. Thank you, Darren. Have a great day. See you all tomorrow. See you later, Hadi. I'm out of here soon, too. This is lunch hour for me, so I'm going to go for a workout and enjoy the rest of my day. Hopefully, you guys got a chance to learn something here today. If you did, hit the like, the thumbs up. I appreciate it. And if you're new to our channel, by all means, subscribe. We're here every day for you. We're here to help you out and give you a level of precision that you don't often see in the markets. We try to show you candle by candle, specific, precise levels. Not very many people on the internet giving you blow by blows on a minute by minute basis with extreme precision. So if you're new, got friends, invite them down. We're here to help you all out. No one's selling you anything. No one's trying to push any agendas here. We're just here to try and stay on the horse, teach you how to watch for clean price action, and then institute a trade. And if you take a loss, you take a loss. You see me take lots of losses here, but there's precise levels that I'm looking for. And hopefully you'll see the logic behind it. If you do, great. If you don't, stick around. Well, it'll manifest itself for you eventually. So anyway, I hope you guys have had a good time. And Ram, I hope you've learned lots today. Make notes. Go back through the video, screen capture and make notes where I've described where changes are expected, and draw it out. Like if you're going to screen capture this, you would box this level in here. For example, if you're looking for this run above this high, you'll take your box, you'll put it in here, make sure it's nice and clean, and you'll type in here like premium develops. We've got highest taken, so this premium develops. We trade below it, so you take your little arrows here. This is how I make my notes, and I point at specific spots right there, and then I say changing the state of delivery would be right for me right here. When we change below, it comes back up inside this level. And then you just say, you can put little brackets in here and say entry zone, stop loss. Put your stop loss up there and just make notes. You don't have to be doing these trades. Just that's where you've got it. We had a guy in here, Dayton, I think he was, and we were encouraging him not to trade, not to do any button pushing. This is the kind of stuff you need to do. This is the kind of work you need to put in. Changing the state of delivery, entry zone, premium develops, and then you can call that text. Entry zone. Now you decide whether you want 1, 2, 3 levels of entry, 1, 2, 3, and it's the way I look at it, the logic of the entry is 1 here. If you're going to put like 5 lots on it, for example, you put 1 here, 1 here, 3 here. Stop loss goes there. Highest leverage goes on the furthest point or closest point to your stop loss. So if you're wrong, that mean threshold, and when I'd mark this out here like this, you can probably just screen capture what I'm doing here. This is how I make my notes for my entry. And then I put in here, for example, failsafe. If you don't know what a failsafe is, go to my videos. It's not an ICT term. It's just something I've come up with, but it works for me. And I put that right to there. And that's, to me, my failsafe is there. If I break that with a wick or a body, I'm out. My stop loss goes up here. So stop loss there, fail safe there, entry zone is in here, and then targeting internal range liquidity, targeting 1, when you just do it an internal range liquidity, target here. So when you enter it into here, and as soon as you hit that point right there, pay yourself. Now what you're looking for here, and then here I'd make notes. I'd say and then you put in some text in here or something like that. I'm just going to make notes because I'm going to actually screen capture this myself. It breaks SIBI. Downside. Rejection block. Old low. Expected. You line it up with that. So I broke that SIBI. There's the SIBI. Take your partial, your SIBI. It broke the old low, so I'm expecting partial, the rejection block, which is right there, and old low. There's the old low. It takes it. So as soon as that there, you can expect leave a partial on, pay yourself at the next level, either here. And I always harp on rejection block. Pay yourself a rejection block. Pay yourself at an old low. This is an internal range liquidity. So some of you guys might not like this as a trading style, but I don't care. It's my thing anyway. So that's what you're hunting for. So as soon as you take that, you go, great. Now then you say, I want to see a retrace back into this level. A retrace back into the SIBI. And then so here, you put text on here. And I'm not form fitting this. This is what I teach you guys every freaking morning. So I'm not just form fitting this. And you say, I want to see a retest of the SIBI. And then go lower. And then you take your little SIBI here, make sure it's marked out nicely. There's your SIBI. All right. Oops. SIBI in question. And this is the 1 minute inversion fair value gap. So let me just get rid of all of this in here. Clean up your charts so you know what you're looking at. So just so you understand what's going on inside that level. Okay. So you see that level, you say, I want to see once this low is taken, you pay yourself. Now you want to see a retest of the SIBI. And then in here, you see SIBI retested, right? So that's what you say, I want to see SIBI retested. It's retested. Now you want to see this discount box get traded through. So that's a box to box trading. It trades through it, and you go, I want to see that low get taken. So it trades through it and then takes the low all in one candle. Okay, so then your next partial is down here. And that will be either rejection block or old low, whatever you want. Best if you take the rejection block. And you say, next partial here. Okay. And now you say, I want to see price retest this one, kind of like what we did here. I want to see it retest this and take this low. And just like I just showed you on the last one, we're not form fitting it. Right here, and we say retested SIBI. And then you say, I want to see it take out this low, rejection block, or the low, we'll say rejection block. And it takes that low out. And then you go, now I recognize this SIBI, now that I've taken this out, if I see it close above that and come back and tap it, I'm out. I'm done my little trades. So right there are key levels. So now you go back and you say, those are a bunch of lines. Unless you understand what it is I'm talking about, here's how you do it. I've done this all for you. Rom, I don't know if you're still in here. There's 18 of you. I don't know if you're still in here, but screen capture this so you'll see what I mean. So entry zone, that's your first objective right here. So that's one. That will be, oops. I'll match this out so you can see one. That's what you wait for first. And you wait for number 2. So we have here, so entry into here is 2. I'm doing all the work for you guys here. See what I mean? So there's your entry zone. You're aiming for here. It breaks there, so that'll be 3. These are the things you look for, all the steps you're looking for. And then you look for 4. Takes out the low, right? Then you, I'm spelling this all out for you every step of the way. This is exactly staying on the horse, explained step by step. Retest, that'll be number 5. I'm giving it to you guys. I'm giving you the whole damn thing. There's only, oh, there's 21 of you in here now. You get to watch this level of precision you're looking for. Then you want to see this get taken on the downside, right there. 6. Right there. Sorry, right there. Partial right there. That's 6. Then 7. And those who are just tuning in, go back over this and you'll see a retest of this. That's 7. And then 8 will give you this little right here. And then you look for this SIBI here, closes above it. And then you go right there. I want to say, oops. Right there. Trade it above it. You're done. That would have been a retrace in here. And then there's more you can hunt for in here, but that's how you hunt everything that I kind of told you this morning. So screen capture that. I'll move my thing to the side. Screen capture that. Study it. And that is a example of box to box, staying inside the staying on the horse, looking for specific levels, and then there's we traded back through this level right to the mean threshold of that candle, traded higher, box all the way back up. Remember that premium box that we said was developing? We're all the way back up inside it again now. You got to change your direction. You want to see this keep coming, take out that low and keep coming back into this range, hunt for this box here. And then eventually back down here. If it takes out that candle on the upside, look for further, dig into this premium box, and then where that old failsafe would have been, rejection block, hold high, keep going higher. So hopefully you see that. I'm going to screen capture that myself. August 5th, 2025. Done and dusted. There you go. This session should be named something really exceptional, as it is so good. All right. So anyway, that's as choppy as that is, Ram. If you've been following along during the day, just go back over and review what I've just showed you here in terms of small ranges, fair value gaps that form, and how these specific levels hold and support price. And you'll start to see a pattern of evolving, and you'll see why we are in here every day doing the same thing over and over again with this level of precision. And that whole thing there, you should reference that over and over and over again. Because even in this chop, and when it cleans up, Ram, I promise you, you're going to see so much precision, and you're going to catch these massive runs. When the markets clean up, you're going to see such detail unlike anything you've ever had before. Your level of trading will go through the roof. You'll catch massive runs. This is just in a choppy market, and I'm just showing you this. Now imagine if this is a nice clean entry and then takes off and runs for higher objectives. Like, holy crap, man. You're going to catch monster runs. This is the summertime, don't forget. Until September, October level, we're going to see some killer runs. So anyway, I hope you appreciate those. I hope you see them. Hope you enjoy them. And I will see you guys. No, I'm definitely not Michael. But yeah, anyway, subscribe, hit the like button if you're here. I'll see you guys. Let's try and get to 2,000 people before the end of the year. 2,000. Can you imagine? Hey, tell your friends, pop on in. I'll see you guys bright and early tomorrow. Thanks for tuning in, and have a lovely day. Did you catch the short earlier? And if you did, what did your entry look like at that? Oh, okay. I did catch a couple of shorts live with you guys, but this one here, we called that exact spot right there this morning. Wait for market structure shift. You've got it right here. I got a short in here this morning, and I think I was aiming for this mean threshold here. I hit that mean threshold, and that was my trade done. And then we're looking for it to retrace back into that to go lower. It didn't give it to us, and I think I got another one, a small one in here. Yeah, right in here. I got a small trade, short in there. I think that's what I got. Let's have a look. Yeah, right there to there. So that's that mean threshold done right there. So yeah, there's your entries, and we talked about those as entry points. Now it's up to you to decide whether or not you want to take these. I give you the precision. What you do with the trades is, if it sets up, if it works for your trade setup, then take it. If not, then just keep studying price action. Stay on the horse, man. That's all we're trying to do. Chase the carrot, not the stick. That's what our ThetaWaveTrader mascot is the carrot. In case you're all wondering why there's a carrot character on there, it's because we prefer the carrot, not the stick. So if you're chasing the carrot, I'll put it out here more for you tomorrow, where we'll chase the carrot, not the stick. Anyway, you see what I mean. It's okay, trades. I hope you, if you're new to our channel, pop in tomorrow, and you'll see more precision. As usual, sending the love. Take care, you guys, and I'll see you tomorrow.